Hello friends, in this video, we are going to do the equity research of Suncor Energy Inc. Let's get started. So first of all, in this video, we will cover everything about the company's overview. Business model, key financial metrics, balance sheet strength, management and shareholding, competitive analysis, valuation analysis, and lastly, we will conclude with the final summary of the company. So first of all, let's talk about the basic overview of the company. Company name is Suncor Energy Inc. The ticker is SU. The country is Canada. The sector is energy. The industry is oil and gas. The market cap is $49 billion. The current share price is $31 and the 52-week high is $38, while the 52-week low is $26. It is listed on the Toronto Stock Exchange. The business model of the company is to develop, produce, refine, and market petroleum products. It operates through two segments. 1. Oil sands. In this segment, the company explores 4, develops, produces and sells crude oil and natural gas liquids from oil sands. The P/B ratio is 2.39. The dividend yield is 4.12%. The debt-to-equity ratio is 0.15. The return on equity is 12.31%. The current ratio is 1.60 and the quick ratio is 1.60. The CFO is Alistair Cowan and the chairman is Michael Wilson. There are no promoters in the company. The largest shareholder is Vanguard with 11.8% stake, followed by eShares with 8.5% stake, and State Street with 5.8% stake. The 3-year revenue growth rate is 27.50%. The 3-year net profit growth rate is 52.20%. On April 2023, RBC Capital Markets has increased the target price of the company from $32 to $35 and maintained an outperform rating on the stock. On March 2023, CIBC has increased the target price of the company from $31 to $34 and maintained an outperform rating on the stock. The competitive advantages of the company are cost leadership, strong cash flows, and a large resource base. The stock is currently trading at attractive valuation levels and has a strong track record of growth and profitability. However, investors should keep in mind the risks associated with the company's business and the stock price volatility. And the second one is downstream. In this segment, the company owns and operates oil refineries and a chemical plant that process crude oil into various petroleum products. If we compare the P/E ratio of the company with its sector peers, then we can say that the stock is undervalued. The sector P/E ratio is 16.43, while the company's P/E ratio is 15.12. The stock price of the company has been volatile due to the uncertainty in the oil and gas market. The company's financials are heavily dependent on the price of oil and gas, which is highly volatile. The company's operations are subject to various environmental risks, including spills and leaks. The company is also investing in the expansion of its refining capacity. The company is also pursuing growth opportunities in the U.S. and international markets. The industry is expected to grow at a CAGR of 4.5% during the forecast period. This growth will be driven by factors such as increasing demand for oil and gas, increasing refining capacity, and technological advancements. The P/B ratio of the company is also low as compared to its sector. The sector P/B ratio is 2.73, while the company's P/B ratio is 2.39. The majority of the company's revenue is generated domestically. Now let's talk about the key financial metrics of the company. The P/E ratio is 15.12. Now talking about the balance sheet strength of the company, the total debt is $13.81 billion. The cash reserves are $3.71 billion, and the net debt is $10.10 billion. The free cash flow of the company has been increasing over the last 5 years. Now let's talk about the management and shareholding of the company. The CEO of the company is Mark Little. Now let's analyze the competition of the company. The main competitors of the company are Canadian Natural Resources Limited, Enbridge Inc., and Imperial Oil Limited. Now let's do the valuation analysis of the company. So based on the P/E ratio, the stock is undervalued. Now let's talk about the recent analyst ratings and target prices of the company. Now talking about the growth prospects of the company. The company is investing in the Fort Hills Oil Sands project. which is expected to come online in 2023. Now let's talk about the risks associated with the company. So in conclusion, after analyzing the fundamentals of the company, I would recommend this stock to long-term defensive investors.